Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, August 7, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? All right, so let's get the big picture first under our belt, and then we'll drill down a little bit farther. So a couple of things are going on. Markets do what I like to call garden variety stuff. Today, Mrs. Market did one of those garden variety things. If you take a good old Fibonacci retracement tool and you slap it on the recent high to the recent low, what you'll notice is the 382 retrace is at 531.24. Today's high was 531.59. There are no accidents nor coincidences. She made a 382 retrace and was summarily rejected. And I'll mind you, without filling the gap up here, the gap was 532.90. We'll call it 533, give or take. That's what I've been calling it in the live room this morning, for example. If they were to continue up, 533 is the next spot, give or take. That was the gap. And they had a nice big collapse back down after hitting the 382 retrace without hitting the gap. But this is important information. Why? Well, just wait. There's more. Where did she come back down to? Right away, meaning same day, came right back down to the obvious, the trend line. Interesting information. We also, over the last couple of days, talked about they're going to do some kind of a retest of the low, whether they make a new low, come up short, test the low. One of those things is likely to happen. It happens more often than not. Doesn't have to happen. It's not a requirement. There are no guarantees. I'm giving you the benefit of experience. Most of the time, you're going to get some kind of a retracement / retest operation. That's not what this was today, but going forward, you might get one yet this week. And by the way, write this down, put it on a sticky note. If you get one of these, reversal of the reversal. So today you can call this a reversal day. Wasn't accompanied by big volume. Just the candle itself was a reversal type of candle. But let's say you get one of these rallies tomorrow or rallies into the end of the week, whatever it is, and they're reversing this candle from today. Are they going to stop at this gap they came up short of, or are they going to go to another / different destination? And it's really the latter of the two. Write that down, put it on a sticky note. Seen that before, read that book before, been to the movie. If by chance they're down at the lows tomorrow, Inside the Number members and live room members will certainly have additional information on the downside in terms of numbers and the accompanying storyline. Either way, Inside the Number members, live room members will have the numbers first thing in the morning, beginning right around 00:30. Lazy Swing Trader Automagical Algo System. Monday was in there buying Amazon 151.71, pretty much nailed the low. First profit target was aggressive. It was up about 9% from entry, 165.55. Gapped above it today, came back down, entry target achieved. Now it's a risk-free, emotionless trade. Amazon picked up the lows on Monday in the flush-out situation. Also picked up on Monday in the flush-out situation at the lows was United Airlines, UAL. By alert issued at the lows, 37.03. Sell target achieved today. First profit target. Rest is a risk-free, emotionless trade. Profit taken just above 40 bucks. You can do the math on that, but the whole time was from Monday to this morning, and the entry to first profit target was over 8%. It's now a risk-free, emotionless trade. Amazon was actually 9.78% from entry. These were little over 2-day holds. How you doing? Lazy Swing Trader Automagical Algo System. Sometimes I get stuff rolling in the inbox. Thought I'd show you a few today examples These are ones that just came in today, Wednesday, August 7th. Here's Joe R. saying the numbers work. He appreciates it. The market does what it's supposed to do after the numbers are achieved. Nice to hear from Joe. Thank you. Appreciate it. How about Michael W.? Great day today. Just out of my final trailer at 527. This is a spider number 50 for a total profit on the trade of $9,620. How you doing? Michael W., trade number 2 today, $3,250. How's Michael's day going? How about Bob V.? Had my best day in a very long time, just over 4K in trading profits today. Your teachings are paying off. Thanks, Bob. These are achievements. This is wonderful information. This is what I mean. You got to help a brother out. There's other people that want to see these type of successes. Post a comment under the video if you're seeing these type of successes. Let other people see that this is for real and not a bunch of hocus pocus. Hocus pocus is a trading term. So at the end of the day today, by the way, the spiders finished down about a little less than 0.7%, 1%, $3.50. Okay, fair enough. Now you come over to the IWM, the folks over in Camp IWM, they were down a little over 1% today, so you have relative weakness in Camp IWM, my favorite market leading indicator that's worth noting. And we'll reiterate one more time, below all the moving averages, the trend is your friend. Well, you're below 3 out of 4 here, but the last line standing in terms of moving averages is the 200 period moving average that was tested 2 days ago. Are they coming back for a retest of the lows or they make a higher low? We'll see. Big down candle, reversal candle, not, and I repeat, N-O-T, not in italics, accompanying volume on today's down leg. This could be a fake out operation, word to the wise. A move like today is designed to suck in the bears back into the market, buy puts, and then issue a conveyor belt of pies in the face by the end of the week. Doesn't work like this every time, but this is one of those books that we've read before. Write that down. Put it on a sticky note. No change in the folks down at the transportation department. Same routine, down about 1%, 150 points or so. Right in the middle of the range. We keep talking about the same range. They're in the middle of the range. There's nothing we can do with it. They come to the bottom end of the range and they spike through the bottom end of the range. It could be a breakdown in the making, but they could also bounce right back up to the top end of the triangular range. Until they confirm by breaking down or breaking out on the top end of the range, this is still going back and forth inside of a range. In fact, in this case, in between the moving average situation. 1% down day, all the charts look pretty much similar to each other. The Q people, volume wasn't bad, but it wasn't increasing volume. It was decreasing over the last few days. Retest of the low coming or a higher low. We'll see. All the charts are in the same type of pattern / camp. But the XLF, they were up a nickel today, not down. Is that a tell? If the financials aren't collapsing, it's unlikely that the rest of the market is beginning to unravel like a spool of thread either. Nevertheless, finished basically on the lows after a gap higher opening, and that was the case today. We had one of these gap and go situations until they crapped out. And by the way, almost forgot about inside the numbers. I have to show you inside the numbers. We got to go over the stuff. Where were the trades today? Did we nail it today? Did we pick off a low? Did we pick off a high? Did we get a whopper junior of a trade? You know where I'm going with this. The answer is, yeah, we did. Pause the video, read the notes, go back to the chart, and double check the work. We have the old origin of the canary in the coal mine situation. You can read up on that if you're an Inside the Number member. Everything's in here from a big picture perspective, 0 dark 30. Let's narrow things down around 921. Let's just get right to the point. 530.50 is the beginning of overhead resistance where there may be a short if they're sooner or later. So just stay tuned for that one. So 932. No pivot test yet, and we had a pivot on the board. The pivot was 526 526.70. 526.70 is the pivot. That was out at 9:21. By 9:37, here's the layout for the short. 530.50 up to 531.80 is an overhead resistance zone and an area for a short scalp with potential if reached sooner than later. 530.50, 531.80. Let's cut right to the chase. The two blue lines represent the zone, 530.50 up to 531.80. The vertical line represents, or right of it, represents today's activity. They got right up into the zone, was overhead resistance. We got a short scalp with potential. We take a base hit, we put the rest in our pocket, and then we try and hold a trailer for more. What'd they do here? They collapsed back down to where? The trend line. But wait, there's more. Remember, pause the video, read the notes, go back to the chart to double check the work. They came up short of 530.50, so what I told traders in the live room, wrote it here, which you'll see it if you're reading the notes, is that now they took the luster of 530.50, let them spike it, let them go into the zone, let them get closer to 531.80. They did all that. They collapsed back down. We had a great trade all around the board. Remember, pause them, read them, go back to the chart, and double check the work. Remember, 526.70 is the pivot. Down to 525.60 is support. This is on the way back down. The pivot down to 525.60. There you go. There's your bounce. It was a trade if nothing else. The pivot down, they didn't get to the second number. They get close. They bounced right back up and gave you the trade. If you're trading in the S&P each and every day or would like to, this is information that you could use to your advantage to make money with. That's what traders in the live room and inside the numbers are doing each and every day. If you're in there, post a comment under the video. Help a brother out. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here each and every day. About stocks on the move today, we're going to take a look at SMCI and Disney. Dell and Airbnb didn't hit their entry objectives. They're off the board. SMCI 519.57, you can see what happened, came right into it, had a nice little tiny rocket ride back up in the other direction to a high of around 547. We're looking at 20 bucks, give or take, $22. That was the first number on the board. That trade's over, they come back down, second trade, 507 even, bounce back to where? The first number. Gave you 12 and a half bucks on the second bounce. The numbers work. About Disney, there's your buy zone in Disney, 87.47. That didn't work. 86.30 was the second number. That did work. Ripped it back in the other direction. The numbers work. We had a lot of participation in Disney today. Live trading room and inside the numbers. Well done. Profits rolling on Diz. We left off with the other charts with smash mouth here. Chart looks the same or similar to all the rest minus the XLF. Looks like the NASDAQ, looks like the S&P, looks like the Russell. All charts act and react the same way, but they don't all have to always look the same. Well, a lot of these look the same, and we'll see going forward whether we have a retest imminent or this is going to reverse the reversal. If I told you how much I appreciate each and every one of you, without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.